All right, we're here with Jim Park. He is the CEO and co-founder of the Mortgage Collaborative. Welcome to the show.
Thanks, John. I'm happy to be here with you.
Yeah, it's great, man. So you're a San Diego native, or did you come in from...
Well, I live here.
Okay.
I live not that far from this studio in your office. I live here in Carlsbad, Encinitas area, so it wasn't too far of a drive, so it was really nice.
Nice. Yeah, so great to have you here. So you tell us a little bit about the collaborative, the Mortgage Collaborative. I know a little bit about it. I know it's you're doing a lot of great things for lenders out there and brokers, so tell us a little bit about it.
Yeah, happy to do that. We started this about 9 years ago, and the idea was to give small, mid-sized originators an opportunity to get the benefit of being a larger player.
Right.
So we get, a little bit like collective bargaining on all the products and services that a lender would need to use to manufacture a loan. So, from title to point-of-sale tools to credit, whatever it is that you need. We hope to bring the best-in-class providers, and we try to provide the lowest-cost option for our members. The thing that people actually love about the organization, beyond the savings, is really, people say being a CEO of and you are one,
right.
A CEO of a lending institution is the loneliest place to be at times, right?
Yeah.
When the market's fluctuating, things are changing, you're deploying new strategies, and you're like, okay, I hope this thing works,
right?
Because if it doesn't, I have to lay people off, or my business goes sideways, or whatever it is, right?
Yeah.
And I think one of the great things, we have about 260 members now. So you have 260 CEOs of major small, mid-sized lenders in the country. And we can share ideas, bounce ideas off of each other. One of the things that I have seen in the mortgage business, I've been part of this for almost 30 years now, is that we keep information and knowledge about the business too close to the vest.
Yeah.
We have way more in common.
It's like we all have these secrets or something.
Yeah, we have all this secret sauce everywhere. Everyone has a secret sauce.
It's like, no, you have the same rates as everyone else.
Yeah, but I think what happens is people, when they come to our event, and hopefully one of these days you'll be able to participate.
Yeah.
When they come, they actually come and share tremendous amount of ideas and data about how they deploy their business.
That's cool.
Their execution, the days to close. Literally every factor, major KPI in their business model, you can compare against other likely positions, similarly positioned organizations, and people walk away with just tons of great ideas. People have deployed new business channels because of being a part of the network. So it's just been great for the members. It's been great, very fulfilling for me because I can see lenders doing great. Obviously, last couple of years, everyone has done great,
right?
But
you just had to have your light on, and
like
phone's ringing.
Yeah, I'm in visits now. The question is, what happens in 2022 and beyond as a rate environment changes, right?
Absolutely. So it goes down to as small as credit, getting your credit reports at a better price, right?
Exactly.
So if you can save, instead of, I don't even know what they cost now, like 20 something bucks for a credit pool, you can save, 20% on that, or
yes, right? And it's all about
appraisals.
Think about all the click fees that you have. Every time every time you have a client, you're going through tons of these things.
Right. It all adds up.
It all adds up at the end. Some of it's related to major deployment of technology. If you decide to use a new point of sale tool, there's a discount for that.
Yeah.
We also have relationship with the GSEs and other institutions so that you get some additional consideration with those organizations as well. Some training, some education, participate in their program. So it's been it's sort of been a great access point for our members in many ways, and so it's been terrific.
I like what you said about it's kind of lonely at the top with the CEOs, and it's true, you don't know where to go sometimes for answers. Especially some of us, it's not like we, have been CEOs of multiple mortgage companies where we have this experience where we've grown companies, to a huge number, and then, dealt with COVID or all this stuff is new, right?
I think literally everyone went through COVID together for the first time, right? It's like people go, what do I do now, right? So
do you lay people off? Do you hire? Do you take up talent?
All of that stuff was discussed. The big thing was remote work, right? And so we had tons of sessions, virtual session at that point, because obviously our in-person events we couldn't do.
Right.
So we did tons of virtual sessions on how to deploy your business
Yeah.
in that kind of environment,
That's
right?
good.
And how do you create a workforce? How do you keep them engaged? How do you maintain production the way you want it? And that's actually been the pretty amazing thing, right? We hit this massive pandemic, and we still were able to get the business done and really pivot pretty quickly as an industry. So.
Yeah, that's great what you're doing. So do you ever have, does it even go as, like I started with the small example, like credit reports, does it go big as like, lobbyists and things like that? Like, do you ever tackle bigger issues?
Well, we have law firms. We have law firms that provide support to our members. We have, my background is I started out my career 30 plus years ago as a lobbyist in Washington, D.C. So
you know what I'm talking about.
I love that stuff. But I also love building a business.
Yeah.
So that's why I moved out to San Diego about 16, 17 years ago. But
get out of D.C.
Get out of D.C. But we know that regulation, policy has a direct impact on our business.
It does.
And if you think about, I know people talk about, oh, you know what, I don't want all this regulation on me, blah, 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 right? People are complaining about it. The fact is that if you think about Dodd-Frank, right, all the changes that came about, it actually normalized the business. It got us back to a point where we could actually compete, and we didn't have to worry about like someone doing something crazy out there.
Some rogue, yes.
I mean, people
Ninja loans and stuff.
People are chasing deals because it wasn't regulated.
Right.
We were doing some crazy stuff back then, and now you don't have to worry about those things as much.
Right.
We compete on, to some extent on price, particularly against some of the larger players, but on service and just being a good lender, right? And that's it's good to kind of be not to worry about all these other things.
Yeah.
Right. So, regulation sometimes can be onerous and all of that, but also it does kind of even out the playing field. And I think we have, as an industry, have demonstrated that despite the regulation, despite CFPB and all the regulatory bodies that oversee our operation, we can still have the best 2 years of our life, right? I mean, I don't think I don't know. It certainly won't repeat in my lifetime. I'm getting old, but
rates were really good, and people had a lot of equity and good. A lot of people had good credit. It was like interesting, like a golden age for mortgages. Hopefully, it's not over, right?
Yeah.
You've seen, you said you've been in the business 30 years. You've seen a lot of ups and downs. The 9/11, the rate, even in 2018 when the rates hiked up and people laid off, now we're hearing like some of these big lenders are laying people off again. And, what are your thoughts right now with kind of the market? Do you see, I know they're going to probably hike rates maybe 4 times this year they're talking about. Do you see this as, some opportunities, or what are your thoughts on the market right now?
Well, I think, what we experienced in the last few years, wasn't sustainable. I mean, that level of volume, the margin we were making as an industry on the loans. I mean, those pretty healthy margins. I don't know how long you can keep repeating that.
Right.
So, but I think we're looking at maybe 30% lower production volume in 2022 relative to 2021. Right. About a third less, but still, it's still going to be one of the highest volume year.
Compared to 2018 or something, right?
If you look at historically, it's going to be a pretty solid year. Yeah. And we have an opportunity still to make money, but also I think we also have to remember that we're in the business of putting people in homes, getting them to, finance their dream, right? And so that's the business we're in. So I think we're going to make some money doing it, but we're also going to do some great things for people's lives. And I think that's important to kind of remind ourselves when we're kind of, we're thinking about, okay, what do I do to deal with the volume reduction, or how do I deal with maintaining my, employee base and all of that stuff? That's the business, we're lucky to be in.
Yeah. What I've heard, and I'm not a real estate agent or anything, but I've heard that, it's sometimes tough for buyers who may not have cash or large down payments to get into homes, because the seller, of course, is going to look at, all cash offer or 50% down, or, and if you have a VA loan, or you have a loan with very small down payment, you're going to have people that are like, I don't know if I want to take this loan on, I don't want to risk it. Right. So sellers are just taking these, it's a crazy market, right? With way above offering over
Yeah.
which someone who has a small down payment can't really do that, because then they might have to make up the difference if the appraisal doesn't come in, right?
Right.
But someone with cash can just pay,
It
pay
it
over.
is crazy the amount of cash that's sitting out there.
Yeah.
Right. And I think it is important. I mean, the rates are going to push up, and it's going to impact real estate sales. I mean,
Right.
there's going to be less people chasing after deals. So you'll be, in some ways, that's sort of the silver lining, right? Because, you may not be one of 20 people going after a property. It might be
Right.
one of 5 or
Right.
6, right? And that gives you a better chance of getting it. Maybe you don't have to compete with as many, cash buyers as, you have been over the last few years.
Yeah.
I mean, there's been lots of interesting studies done on, like, is it because people are moving out of San Francisco high cost markets or New York, and they got tons of equity and they're just kind of
Just paying.
whatever it takes
To them, it's the values there, right? They had like a 3,000 square foot in Palo Alto or whatever, and then they moved somewhere else where they can get a 6,000 square foot house, same price,
Yeah.
or less.
I mean, you look at San Francisco, like Tahoe as an example, or Sonoma.
Yeah.
Their prices just skyrocketed because all the people from the Bay Area
Yeah.
who had tons of equity, tons of money, and went and I thought, oh, okay, I can get 6,000 square foot house for like a couple million. That's like I get a 2-bedroom
Right.
apartment.
The old house, yeah.
Exactly.
Yeah, we've seen it in San Diego too. I mean, some of the tech coming down and saying I can live in.
Yeah, I
by
have
the
some
beach.
neighbors are coming in from LA. I have some neighbors from LA now,
Yeah.
and I'm like, oh, this is kind of new,
Right.
But
Yeah.
because they thought, you know what, I got to get out of the city. I got to find a more of a suburban lifestyle, I
Right.
guess, by
Yeah.
the beach. So
And LA's not
yeah,
not going in the right direction, I don't think.
Yeah.
As far as just homeless and all the
yeah,
other
the
issues.
lifestyle issues that people have there, and so
Yeah, so that's so I think I agree. I think there's some opportunity. I think there's gonna be a lot of cash out, like you probably saw in your career earlier, like when there's higher rates, people and a lot of equity, people tend to do cash out loans,
yeah,
right, to tap into that equity and pay off credit cards or pay off different things. So I think that'll be kind of where things go this year. There'll be more cash out refinances, maybe interest only loans because they can keep their payment the same,
Right,
and then
right.
hopefully wait for another dip in the market to refi again. And but yeah, I mean, non-QM is predicted to double this year, and I mean, we all think we have crystal balls, right? But
Yeah, I think we've been talking about non-QM moving up, volume moving up for a long time, but I think it's hard to move up when the rate environment is that low,
yeah,
right? And so now,
if someone's thinking of a 2 in their head and then they're looking at a 4, they're like, ugh.
yeah, but when it's at a 4 and it's a 6, then it's different, right?
Right.
And so I do think the non-QM business will grow because
Yeah.
the rate environment will kind of the margins will thin out there, but so I think and also we'll see. I mean, we'll see how the demand for housing looks like going forward, but
Yeah.
we also know the home prices have moved up. I mean, you guys are in the jumbo side, right? And
Yep.
the home prices are crazy.
They're crazy.
And I think San Diego, we went up by 20-25% or something
like that.
last year, something crazy. And hopefully that's not. I mean, that
You can't keep going 2020. Yeah.
income's not growing by 20%.
Right.
Right. And so at some point that gap, there's going to be this wide gap that's you can't leap over that gap anymore.
Yeah.
And people
it's
can't
gotta
buy homes
calm down.
anymore.
Yeah. Yeah. It's interesting, because some of the cash buyers are institutions, right? I mean, I don't know the data on it, but you hear, a lot of maybe it's Vanguard or these big, BlackRock or whatever,
Yeah.
buying up homes, and then you get some of the say the small guy, right, like the just the family that's trying to get their first house, or the millennials that are trying to get their first house and they just get bid out. And does any of that concern you, or do you think that'll just balance out this year?
Well, it's still, if you look at institutional investors, still represents a small percentage of asset holders.
Yeah.
Still, it does over time. It makes it harder for people who are first-time buyers, kind of moderate income individuals. It's going to be very hard to compete, right?
Yeah.
And you do see sort of the homeownership gap that is kind of forming.
Yeah.
In the market that's even wider than it was before for certain
Right.
populations, and so more investors kind of coming in. That makes it tough, but it is still not way outside of historical norm in
Yeah.
terms of the absolute numbers. So, yeah, but it's, these kind of single family rental strategies of, BlackRock's, all the major institutions of the world. I mean, it is crowding the space a bit,
Yeah.
but I do think, they're not dumb either. They're going to kind of do it as long as there's sort of a return.
As long as the rents keep going up, right?
Rents keep going up. At some
People
point,
pay the rent.
right.
Yeah.
At some point, that may even out. So
Right.
so we'll see.
It's crazy how much rent has gone up in this area. I mean, I haven't looked at it, but people I know who are looking to rent are like, it's gone up so much, like almost doubled in the last couple of years.
Right.
The rent.
Yeah, it's like everything's gone up, right?
Yeah.
It's expensive to buy and it's expensive to rent.
Expensive to
and,
build.
And so that's why you see people, there's a little bit of out migration of people because of it, right? They're going
Right.
to low cost.
Arizona, Idaho,
Yeah,
Florida.
like my nephew who he's like, you know what? I can't, he's newly married and he's like, I can't buy anything here. So I'm leaving. They moved to Denver.
Yeah. And with
Right.
remote work, you can do it.
You can do it now. And, I mean, remote work won't be everywhere, but it's still going to be more than what it was before the pandemic, right?
Yeah.
People have adjusted to that. And so there are sort of this perception that you can move to, wherever
Denver,
in Idaho.
yeah.
Yeah.
Wherever.
Middle of nowhere. As long as you have a good Wi-Fi connection, you're good.
Yeah.
Right.
As long as you can stay connected. So what I was going to ask was, you did mention some about like there's a disparity or there's some widening of, people who are renters versus homeowners. Do you have some data on that? Like, do you know what's causing that? I mean, obviously the price gap, right? The price is going up, but do you have data on like what percentages at all with you or?
In terms of renters versus,
Yeah.
we know that average renter in this country, it's a nationwide figure. It's like if you're looking at an average renter, their net worth in this country is like, I think on average like a few $1,000s. If you're an average renter,
Yeah.
if you're an average homeowner, you're like your average net worth is like 150 or something like that. So, homeowner versus renter, there's this huge gap in
Right.
wealth,
And net
right?
worth. Yeah.
In net worth. Now, the challenge is because the rental costs have moved up. People aren't able to save.
Right.
All your money is going towards the rent and
Right.
whatever else living expense you got, and so you're not able to save to be able to move into a home, right? So that is a concern to me, which is, the sense of an American dream of renting, working, and doing whatever you're going to do, save, and then buying a home.
Yeah.
I think that vision has sort of it's like getting fuzzier and not quite as reachable as it used to be. And that is a problem as a society. Like people have to see upward mobility as something that they have a shot at. If they stop seeing that, it does create, I think, underlying issues for us as a community. So
Yeah.
hopefully,
Do you see that trend like going up? Like
I'll give you an example. Yesterday was MLK, Martin Luther King Day, right?
Yep.
Yesterday. You look at since the Civil Rights Bill and all that was passed, in the mid 60s, to now, the homeownership rate for African American community right now in this country is actually lower than it was then.
Wow.
And so you kind of go, okay, how do we fix that thing? Because, homeownership rate, I think for African Americans are like around low 40%, like 42 or 43%. For average white family in this country, it's like 72%.
Wow.
That's a 30% gap
Yeah.
in wealth
Yeah.
creation opportunity, right?
Right.
And I think as a society, that's why we're in the business we're in. It's like, okay, what do we do to be as part of the solution? Because it's not, the lending industry can't fix it on its own, or the home building industry can't fix it on its own. It's a bigger issue. But it is a symptom that we have to kind of look at very carefully, because over the long haul, that kind of disparate experience as a community is not a good thing.
No.
For all of us.
I think some of it's education, right, with how to buy property and how to.
Yeah.
I don't know what it is. Maybe it's on social media. I constantly get like, classes on how to become this, or and there's a lot of coaches out there trying to, and maybe they're trying to make a buck to sell teaching like on how they.
Well, financial literacy is important, certainly, right?
Yeah.
And it needs to be taught earlier.
Like the rich dad, poor dad thing.
Yeah. But it needs to be taught earlier in maybe high school, or people.
Mm-hmm.
Not everyone goes to college, so you should learn stuff like that earlier on.
I mean, you can learn it with YouTube now, right? I mean,
you can learn it everywhere. But the bigger issue beyond knowledge and education around these things is this: if you look at first-time buyers,
mm-hmm.
and a lot of times, when I was a first-time buyer, my parents gave me a few $1,000s.
Right.
My house wasn't that expensive, so it didn't really matter, right? It was a few $1,000s that they had. They gave it to me to help me with my down payment.
Right.
Right. But if you look at how, like, an average African American, an average white person, the white first-time buyer
mm-hmm.
Are 4 times more likely to get down payment assistance from their parent.
Member. Yeah.
Right. Than a black person. So that means what that means is that there is this wealth gap that's stalling the ability for black families to give to their. So that stops wealth creation, right? Because you don't have the money to begin with, right? So
because you take a trajectory out for years, and what happens, right? You have people staying down, and you have the people.
Yeah. So education alone can't fix that.
Yeah.
Because there's a wealth gap to start with.
Right.
And so you can educate the heck out of everyone, but like I don't have the down payment.
Still
So what do you want me to do?
Screwed, yeah.
Right. So.
Well, so you said during the civil rights that it was higher. Do you think
it was slightly higher? It wasn't, but
higher. So it hasn't improved.
It went up. It went up a little bit, but during the whole subprime thing, the black community really lost a lot because there was a lot of targeted subprime lending.
Terrible loans, right?
It was terrible, and a lot of African American communities lost homes during that period of time because of subprime, pandemic. I guess, and the Hispanic community is facing similar, not quite as extensive an issue as the black community, but there's a challenge there. In the Asian community, actually, the homeownership, one of the organizations that I was involved with when we started at ARREAA some 19 years ago, the homeownership rate for the Asian community was in the low 50s, like 51, 52%. Okay. Now it's at 60. So we've actually moved it up.
That's increased, yeah.
That's increased. But it's also just, you have to look at the demographics of people within the Asian community, which is really highly educated. A lot of immigrants who have come here to take on really, high-paying, very professional jobs, right? And so that the same barriers have not always been there. Although for a certain Asian community, that's not always the case, right? There's a bell curve to everything, right? There's well-to-dos, and there are people who are really struggling. And so, we have to kind of think about all of those things.
So how is your organization?
Actually, pause for one second. Memory card.
Yeah.
We switched out.
The memory card.
We're going so well, man. I don't know if I can. I don't know if I can recreate this.
Why did I have to do it now?
No worries. Yeah, I think the next question I was going to ask you is, you have some nonprofits that you work with, right?
Yeah.
Or do you have your own nonprofit?
I have some, but but it's really a. It's a I don't own it. I mean, no one owns a nonprofit.
Right.
Technically, you can start it, but someone else.
It's like a community kind of.
Yeah, it's a public benefits, what they call a public benefits organization, so that no one really technically owns it.
Yeah.
So
I was going to ask like what you're doing, and then kind of what the mortgage community or the loan officer community could do to kind of help to make those changes in the black communities and the.
Right.
Right.
I mean, there's a lot of things like if you look at like even appraisal, like if you
we'll
look
save
at,
it for the camera though.
Yeah, let's just give you a little history on it. Like if you look at the appraisal industry, appraisal industry is historically very white and older.
Yeah, they're all old white guys.
It is.
My brother-in-law is an appraiser, and he's like, I'm the youngest, and he's like 52. He's like, I'm the youngest appraiser.
The industry's been trying to figure out ways to get more diverse individuals and younger individuals to get into the appraisal business. It's been hard, right? And like, I don't know, something like 90% or 86%, I forget what the exact number was, of appraisers are white, and like average age is like 58 or 59 or something, right? That's what you're looking at.
And they're dying off, yeah.
And then you're looking at, and those, you're asking those.
Is that back on the camera? Let's turn this and try to get a little bit, just while we can.
I'm gonna go
Okay. Yeah, turn this part here towards the mic too.
Okay.
Yeah, there you go.
There you go.
Okay, perfect.
Okay.
We're ready to, Scott, we can keep going? Okay, so I know you have you're working with nonprofits, or you started a nonprofit or two. Tell us how we, as loan officers, mortgage brokers, can help change some of this, because I agree, it's like that shouldn't be the case, right? It shouldn't be going down from when the civil rights movement happened. It should be just like with the Asian community, it should be going up and getting better. There should be better homeownership ability. Is there something that that we can do, or that you guys are doing to help better that?
Yeah, this is going to require a lot of effort on part of a lot of folks, right? It's
Yeah.
not. This is not a
Can't flip a switch.
Yeah,
Fix
the
it.
lending industry alone can't change this.
Yeah.
It's a broader issue of things like education and access, income, wealth creation opportunities, and
Right.
and jobs. Ultimately, it's about jobs, and but we have a part in that solution, right? And I do think there is a big part that is education related, and some of it is also outreach related, right? So we need to make sure, historically, as you know, there's a term called redlining, where people would
Yeah.
not go and lend in certain markets.
Right.
And we have to reverse that in some ways. We have to go in and seek out opportunities for people with good products.
Yeah.
So what I would encourage the broker industry, the lending industry as a whole, is let's go into communities that traditionally has been underserved, and let's see whether we can provide some products and service that makes sense for them in the
Yeah.
situation they're in. So that's number one. I would say two, as a loan originator or a broker, there are a lot of nonprofits in local communities that are doing, credit counseling to financial literacy or mortgage readiness training. There's tons of them.
Yeah.
And I would just go and volunteer. Say, how can I help you out?
Yeah.
You don't have to, it doesn't have to turn into a lead necessarily for me,
Right.
but how do I help out? And
Yeah.
over time, that kind of work will convert into opportunities in terms of business. But I
Sure.
think you kind of have to go in there saying, hey, how do I contribute the best I can?
How do you add value? And then that's just kind of naturally how things kind of can progress into, you give and it kind of comes back, right? It's a reciprocation. Like
Right.
it's
Yeah, so I think just giving people honest third party assessment of their situation, what they need to do to get to homeownership.
yeah.
That's very valuable,
Right.
and I think we all can play a part in that. And someone was saying yesterday was MLK Day, and someone was saying, can you, a lot of people were posting stuff about MLK
Right,
and all that, his amazing quotes. And they said, well, instead of doing that quote, are you going to live his legacy the 364 days outside of MLK Day?
Right. Are you just trying to get attention? With
Right.
your
Right.
post?
Like everyone's posting it, So I think it's kind of incumbent upon us to kind of step it up.
Yeah.
And, even if it's small, I mean, everyone can call up a nonprofit in their local community and say, hey, what can I do to help?
Yeah, I'm a mortgage expert. Can I speak and
Yeah.
educate, or
Right.
Maybe talk to you guys about some programs that can help you get into homeownership? And,
Exactly.
yeah, I like that. That's it's hard. Sometimes we just don't think of it. It's like we're so inundated with our pipeline and our closings. And
Well, we're going to
Yeah.
have less business this year, so
Yeah,
we're going to have a little more time to think about.
Here's some ideas for
Yeah.
my listeners to branch out and see what they can do to help.
Well,
get
last
back,
2 years, obviously, everyone was drinking out of a fire hose, and
Yeah.
it was too hard to do anything but just to try to close your deal, right?
Right.
And but I think we'll have a little bit more time to be thoughtful about things this year and
Hopefully,
cultivate.
Hopefully, people save some money and
Hopefully, they didn't spend it all in Cabo or wherever they went, right?
Exactly.
But we hope it gives them a little bit of time to kind of think about what they can do to give back, but
Yeah.
also that'll cultivate new relationships over time as well.
Sure. And so, what you seem passionate about this kind of thing. What kind of got you into that?
About
Maybe your background, or
well, I came to this country as a young child. I was 9 years old, so immigrant.
did you know English?
I knew zero. Like
Wow.
I knew nothing. I think I knew the word Disneyland. I think was the only thing I knew when I landed in this country at
Wow.
9. I remember my second day I came and I was saying we had an uncle who was here, and I remember this very tall. I thought he was tall because I was 9. I wasn't that big, but this tall postman comes by, drop off the mail, and he says hi to me, right? I didn't know how to respond because I don't know what that meant exactly. All I knew is I thought, oh my God, this big guy is saying something to me, and I just ran to the house. And so that was the beginning of my experience in in America. But
where did you move to, and where'd you move from, and where'd you move to?
Well, I was in Korea, and we moved to. Well, we were supposed to actually go to Baltimore, Maryland.
Okay.
That's where we're supposed to go, but we did a pit stop here in LA, Orange County, and this was in January, and the weather was perfect. It was sunny, and
was it cold in Korea then?
Korea weather in South Korea or Seoul, that part is like comparable to like a DC weather, which could be a little bit of snow sometimes, but cold, like 30s, 40s, and all that. And so when we got here, we're like, all right, I don't think we're gonna keep going. And so we ended up just staying in Orange County. But my parents had a very kind of a modest life, right? As immigrants in the mid 70s, you couldn't really get a professional white collar job, anything.
Right.
You just were. That was not an option. You had people who were doctors who couldn't get a job as a doctor again. They couldn't even work in a medical facility because they wouldn't hire them, right?
Right.
So that's why you saw a lot of entrepreneurship and small business owners, and because that's the only way they could make ends meet.
Yeah.
My dad became a gardener, right? My mom became a seamstress because that's the only way
they could make money.
They could make money. They did what they could. My mom worked overtime and this and that, and so they saved enough money. I think about 2-3 years in, I don't know how they did that, but they saved enough money to buy a condo in Orange County, and then
investment.
2-3 years later, 2-3 years later, that they made a chunk of money on that, and then they flipped. It wasn't a flip because we lived in it, but we moved to another place in Irvine, which was back then was mostly orange groves, but we ended up buying a place there, and there you have it, and that home. That's why it's like I keep talking about the home and why it's so important, that American dream.
What the power of homeownership does for
because
families.
that home, the appreciation, the equity that was built up over those years really gave them an opportunity to start a business. It gave us an opportunity for me to go to college and my sister to go to college and all the other things. And they've had a couple of failed businesses along the way. That equity helped them cover the losses, right? Yeah. And so it's I don't know. If you think about it, I don't know how our life would have been if we didn't have a home that we own, right? Yeah. And so that's why when I think about people, immigrants and other low-income individuals or even modest income individuals, when they're struggling to buy a home, I think about myself, my parents, and what it took to make it.
The sacrifices they probably had to save a ton and not spend much and just sacrifice.
And I want to make sure that everyone has that shot, at that chance at making it and doing well, right? And that's, I think that we're we have an obligation as an individual, but as people in the business to say, okay, how do we open more doors, be responsible about it, and how do we get back, right? And that's why for me, 30 plus years. This has been kind of my, I don't want to call it a calling because it sounds like, I'm no Gandhi.
Yeah, but, it's like mortgage business, counting numbers and collecting paperwork is not, curing cancer. It's not like something that everyone wakes up and, so excited to do. But if you have some kind of purpose behind it and you have a way to see impact, even as, we're not firemen and saving lives, but we are impacting people every day when we get them, home ownership, and they were able to now have something they can pass on to their kids or, whatever it is, right?
Exactly. Well, it just think about that thing, right? Average renter, average net worth, being a couple $1,000, average homeowner, 150 or whatever thousand. That massive difference in net worth has a huge impact on the trajectory of their life and trajectory of their kids' lives, and that's what this is all about, right? And so we have to always remind ourselves, like, this is we're not pushing paper. We're not just, dealing with
trying to collect our next commission. Yeah.
I mean, of course you have to pay the bills, but I think we have to celebrate the business we're in because it does impact people's lives. So
I've seen what it's done to to my life. I mean, my parents, moved around. We moved 17 times growing up, and my dad, he's a pastor, or he was a minister, and so it changed our lives when when they finally settled down in San Diego and were able to buy a place. It's crazy. I think they bought theirs for like $250,000, and it's like over $1 million now. It's you see what happens, right? If you're able to get into the homeownership, and I don't think that's going to stop. I mean, it might not be 20% increases, but it's always because of inflation or whatever. Yeah. You're going to have this equity gain, that you.
Historically, homeownership, home value has increased somewhere in around the 5 to 7%, which is solid.
Right.
And we also have to remember that 5-7 is not your return amount, really. It's based on how much you put down, right?
Right.
So it's
the leverage, yeah.
The leverage, people go. So when I go, don't talk about 5-7% increase in home value. It's way more than that compared to what your down payment is. Right?
Yeah.
So
where else can you take a $20,000 down payment and gain $100K in equity or $50K?
I mean,
in equity?
Sure, maybe early days of Bitcoin or something, but
Facebook stock in the beginning.
Yeah, but now it's a known quantity. What it is. It's an asset that
Right.
And so I think it's always going to have that upward movement. And we've had a good run as an industry for a long time. So who knows? Maybe it drops a little bit, but I think as long as the supply continues to be constrained overall, it just won't go down the way I think we've seen it the last go around, which was a last go around. Because I was in the default business, I had distressed asset business back then. It went down because there was too many buildings, too many homes relative to people.
Too much supply, right? And then not a lot of equity.
Not a lot. Well, like sometimes
zero
negative equity, right?
I mean, to start out, right? Like so many zero down, zero income, zero assets.
Yeah.
It was like, I don't know how many millions of loans were made like that, but you think back and this now is different. Half the purchases are cash.
Right.
So many people have equity already just from the run up, and if there were to be another, like kind of a sell off where a bunch of stuff came on the market, people would have the ability to at least sell their homes because they have equity.
There's plenty of cushion in there. I think you mentioned this earlier. The home equity business is going to do well, I think, because people are sitting on a lot of money.
Yeah.
And they'll take it off, for lots of different reasons that they need. But although people are spending a lot of money on fixing up their homes nowadays, right? So there could be more of that.
Yeah.
If you can find a contractor that'll show up.
Exactly. Yeah. You finally find one, and then they get COVID, and you're like, what? Oh,
yeah.
Got to delay again, or
and they'll say, that particular, whatever, that cabinet. Oh, I can't,
Can't get it in.
I can't get it in anymore.
Yeah,
It's
get
gone.
it in anymore.
It's gone.
So the Asian Real Estate Association. Tell me about that.
Well, I'm going to go back a little bit further. I remember when I was a lobbyist. I remember, I was telling you about that.
Yeah.
I lobbied in Congress. Was
it for the mortgage business or real estate, or was you lobbying for what?
I was lobbying for cities and states to get federal funding for affordable housing, homelessness, job training, and so on. Right.
Okay.
So mostly for low wealth, low income communities.
Yeah.
That's what I was lobbying on. This is going way back.
25 years ago, maybe, or
30 some odd years ago. Yeah. So so that had a tremendous influence. I was a young guy back then. I was just, I thought I can conquer the
newly
world.
out of law school, or
I had policy school, master's in policy, and then I went and did that for a few years. But it was an amazing experience, obviously, back then as a young man. But it's also one thing that was kind of imprint that I had in my head after it was that when I went to Congress to lobby on different issues, there were very few people of color, diversity, lobbying on issues and so on. I would say the African American community maybe was a little exception because politically much more active.
Yep.
From way back when. But particularly for the Asian community, we saw no one. I saw no one that looked like me working on any issue. So I remember back then I said, if I could ever help in any small way to organize and bring together our community to further an important cause, whatever that may be, I'm gonna do that every time, right? And so because of that, some folks came to me and they said, "Oh, you know what? We're thinking about starting this Asian real estate group and this and that." And I was like, "Okay, let me. I want to help you with that."
Yeah.
And I gave them their first kind of major grant to get it off the ground, and funded some research, and then ultimately I ended up having to run it at the back of my office for about a long time. But we have a professional set of staff that run it every day, and it has grown. You know, when I obviously started, you know, when we got it going 19 years ago, we had 0 members and what have you. Now we are at like 18,000 members.
Wow.
43 chapters. We have literally events almost every single day of the year. This was prior to the pandemic, of course. Now there's less, but there's still quite a bit of events going on, virtual, in person. And so it's really built into this very powerful movement. We also, the organization also pushes on a lot of important policy issues related to homeownership barriers for minority communities. So we work on those things as well. But it's really a great networking venue. It's a great way to learn about other people's and their business that they got going on. From a LO or a broker point of view, it's a great organization to get involved with if you want to get involved with the Asian community.
Yeah.
Right. And so if you're doing, jumbo loans, Asian community actually uses quite a bit of jumbo loans because we tend to be in higher cost markets,
Right.
generally. So it's a great way to kind of connect in,
Yeah.
through.
And that's the key to getting referrals, I think, is when you connect in and you give to them and you get, it's this reciprocation. Yeah.
100%. The thing is this, it's like people, when they're involved with the nonprofit work, they're not there, there's exceptions, but for the most part, people there for the positive, good reasons, right? And so people's guards are down. They're more likely to connect with you and build a relationship with you.
Right.
And so I always say it's do good, do well, I think that's a good motto to kind of live by in the business we're in. Try to give back all the time because it'll come back to you.
Right. That's important. Yeah, because it does. I've seen it firsthand as well. So if kind of to continue on that same thing, if a broker wanted to get involved, like how would they go about it? Is there a website or how
if they go to ARREAA.org, so AREAA.org, there's a listing of chapters throughout the country. So
they're all over the country.
It's all over, and so they'll see where they can go to join.
That's great.
And then they'll get plugged into those, whoever the local chapter is. It's a national organization, but national, is sort of meaningless unless you kind of go, okay, I'm going to go to 3 events a year. It's hard to build relationship that way.
Right.
When you're there locally involved, you kind of build it's a relationship business at the end of the day, right?
It is,
and you have to show up, you have to support, you have to just kind of get to know folks, and business will follow at some point when you do that.
I agree, 100%. So we were talking earlier about appraisals and appraisers. You want to go into that more?
Yeah, I know. Aside from, like most of this industry, diversity is lacking, right? And particularly in the appraisal side. And so it's generally older, generally white, right?
Why do you think that? Why do you think that happened? Why do you think that? Do you think at one point a bunch of white people really wanted to be appraisers, or do you think it was just there was a I'm just curious, like how that happened.
I don't know how exactly it happened, but you got to remember that before the '60s, which for us, like I was born in the '60s, but you weren't.
'70s, yeah.
'70s. You forget that there were a lot of things people of minority background could not do.
Right.
Right, and so
because you don't have to have a college degree to be an appraiser, you just have to find it like an apprentice.
I'll give you an example. In the '60s, if you were of somewhat of minority background, right, you could not be a part of the local board of realtors. So they said, if you're a minority, so I'm not going to let you in. So you have to. So if you wanted to be a realtor, in the '60s, you had to work outside the system, right, and you have to kind of so. It's a case with a lot of the business we're in, right? Where historically you were kind of precluded from being a direct participant in it. And so when you have that legacy, it's hard to break. Yeah. And you're kind of, it's shocking, right?
Right.
that
because growing up, we didn't grow up in the 60s. You were born in the 60s, right?
Yeah.
So, growing up in the 80s and 90s, I really had seen the 90s,
Yeah.
and then finally getting into what do I want to do with my life. That wasn't on our radar. It was like that, the minorities couldn't become a real estate agent. Like we didn't experience that
right.
as, our generation, but our parents' generation for sure. Right. And
so what happens is there's the legacy impact, right?
Yeah.
The legacy of that. And when you see a certain industry that was built that allowed only a certain population in, it just kind of perpetuates itself. So if you look at even appraisers, they'll find a lot of people, rightly or wrongly, that there's unconscious bias in everyone in some level. So a white appraiser is going to train. It's
another white appraiser,
yeah, it's because that's who they know. That's who comes from their community.
How gangs get started, right? They all like each other and similar, and
exactly. And so unconscious bias kind of creates this snowball effect, right? And so what happens is you gotta step in and say, hey, this just trajectory is not working. We need to bring other people in. It's starting to happen now to some extent, but it is slow.
Yeah.
Right. And now there's certain parts of this industry, like the appraisal industry, I think will to some degree get disintermediated because of technology over time. So it may be a non-issue at some point, but for now it is, right? Yeah.
That's interesting. Yeah, it's not easy. These are not easy topics to solve, right? I mean, it's just it takes time and it takes effort and energy and awareness, knowing about it, right?
We just have to be mindful. I mean, you have to kind of recognize, we went all the way back to the 60s, which was a long time ago.
Yeah.
But you have to be mindful that there are a lot of things, unless you make a conscious effort to make a change, it just doesn't happen, right? Inertia typically wins the day. Right. And so that's all. I think that's what, that's an obligation on our part, right? We're, I'm sort of tail end of my career. You're still right in the middle of it, but we have a moment in time to make certain things happen for the good of everyone.
Right.
And I think that's something that we should think about, as someone who is very fortunate to be in the business that pays well.
Right.
You get to do some good stuff, it's a blessing, right?
And you think too, you got to think about parents and how they influence your kids, right?
Yeah.
I influence my kids to try to do certain things. Like I'm a songwriter also and a musician, and my daughter's a songwriter and she's 16, and I'm like sort of pushing, not pushing her, but like encouraging that, right? And so like, you wonder also with different cultures, like what they kind of encourage to be. And like, I'm curious, and I don't mean this at all disrespectfully, but like, does the Asian community ever encourage their kids to be appraisers, or do they more looking like engineer or doctor or lawyer?
I'm pretty sure there's like zero
families
saying, "Hey, be an appraiser."
Yeah,
but
but there could be that opportunity, like say, like at a high school. Where here's some things that you can get into, and here's some fields, whether you're going to be like, like there's certain industries that are crushing it, that you would never think that are crushing it, and you don't know about it, and maybe your parents wouldn't even know about it.
Right.
So, I don't know. I think there's a lot to be done in that too. I just wanted to point that out because I don't know. I just know I see it with my kids, and when my son wants to get in the mortgage business and then go travel the world, and I'm like, it's hard, you could do it, but like get in the mortgage business. You can make a lot of money, and you definitely have some wide open doors because of my my position, but it's interesting to see. But then some minority communities don't have the parent family household that's giving them that that kind of direction, and like
part of it is, I think that's an important point, which is we do have to get more minority families involved in this business, whether as appraisers, whether it's LLs. To be honest, that's how you're going to have a bigger impact on homeownership rate for minority communities, because people want to be approached by people that sort of look like you and a little bit
work with people that they can
relate to, right?
And
so I do think as an industry we have to go out and identify loan officers, people, other segments of the business that we're in.
Right.
We should we gotta recruit folks in here, and to get them to be part of the solution. But it also requires us to be very conscious about doing that.
Yeah.
Right? It's just not going to happen on its own. Right.
Because there's a stigma that a loan broker or loan officer is this old white guy, right? That's just kind of, or a banker that's an old white guy, right?
Right.
Even with, I did a podcast with, with someone who's very involved with, women and mortgages. So there's a huge push for women to get into mortgages more,
right?
Because it's been a dominated, male industry,
right?
And so,
well, I mean, it's going to become necessity in this way. Like, I think right now, if you look at women, I think single women buy more homes than single men.
Really?
Yeah. It's that those numbers are shifting on us quick,
wow.
And so, we got to figure that out, right? We got to recruit more women into the business in those positions, and if you want to grow that side of the business, right? And the other thing is, like, the market's changing on us all the time, right? And the other day I saw data around crypto that 1 out of every 10 first-time buyers sold crypto to fund their down payment.
1 out of 10.
1 out of 10.
Wow.
I was like, how's that even possible?
Yeah.
Right. But
is that millennials?
These are first-time buyers. So first-time buyers
Could
tend
be
to be younger.
Yeah.
Right? They tend to be younger.
And they're more like savvy about crypto. And
I tell you, I think a lot of these young kids probably, I don't know, invested a few bucks and now they're worth a ton of money. I don't know, but 1 out of 10. It was done by Redfin, actually did the survey.
Wow.
And so it was I think somewhat semi-legit survey, right?
Oh, for sure.
And so that number, my guess, is going to keep going up.
Yeah.
So what that tells you also is you better get younger people more involved in this business too, right? So it's
you got to be on the know on stuff like this.
More diverse people, more women, more younger folks. You know, like even the real estate business. It's like real estate business is generally more white and older. The average age of a real estate agent is like 57, right? And that's like my age. I'm over the hill, so I shouldn't be out there selling.
Than that, but
I should not be selling real estate, right? So,
and some of them are really old and they've never updated their photo.
Well, that's the thing. Most of the time you're kind of shocked. Like,
you're like,
oh, that's a photo from like your high school.
Yeah. Oh, that's funny. Do you think non-QM will help with some of the communities that we're talking about?
I think it will, and I think we have to be very thoughtful about how we do it.
Yeah.
Because I think some people will view non-QM
kind of like subprime
as a new subprime.
Yeah.
Right, and we have to be very thoughtful about how we roll that out.
Yeah.
Because now, previously, ability to pay. Was not a factor. Now,
ability to breathe is what we
ability to breathe. Even then, I don't even know if you had to breathe, right? Like, you go, okay. Yeah. But that we have to make sure that is upheld. We can't bypass that, right? And I think giving people an opportunity for non-QM, non-traditional lending, I think is important because it does. Not everyone fits the box.
Yeah.
And I do think us as an industry only being reliant on the GSE execution FHA, that can't be the solution for 100% of the population.
Right.
It will for a big chunk.
Yeah.
But I do think non-QM is going to have to be an important solution to that.
Right now the barrier is the down payment, right? So where go with the GSC product, you can do 3% down, 3.5%, whatever, and with non-QM you're at 10, really. Right. If that, I mean, I think there's stuff coming out with 5, but it's still 10. I mean, primarily, if you're doing a bank statement loan, which is what really non-QM is around mostly is bank statement loans, you have to put 10% down. So
that's a challenge for a lot of folks. That's a lot of challenge for a lot of folks. For the Asian community, not as much because we tend to put down more down payment than any other population generally. But
how is that? And I don't want to get too deep into like culture, but is it savings or is it family passing money down?
It's
or
a little bit of both.
Better
a little bit of
jobs
both.
Or
so average Asian American in this country, average. This is not everyone. Sometimes these averages hurt people at the lower margin because they don't get the help. So I'm always a little cautious about doing it. But on average, Asian Americans median household wealth is substantially higher even than the white community. A lot of it is college education, like 50% of Asian Americans have a bachelor degree or higher.
Okay.
Right?
What is a white?
National average is around 24%.
Wow.
Right?
I thought that would have been a lot higher now with the college.
No, even with that. No,
Wow.
it's around that 24, 25%. Asian Americans are like around 50. So average income is higher, tend to live in higher cost areas. So there's sometimes a little bit more equity built, right? So because of all of those things, and the credit history of most Asian Americans tend to be pretty solid. Now, there are people who have alternative credit because our Asian Americans are new immigrants to this country.
Right.
So sometimes they have not built up credit,
Yeah.
accordingly. So it's a challenge, right? But
And they're probably, and I could be wrong about this, but culturally, there's a hesitancy to borrow credit cards and things like that. Is
yeah,
it? live a lavish lifestyle that you can't afford.
well, it changes quickly, right? After a few years here in this country, that changes. But traditionally also, if you come from most Asian countries, don't have like these low down payment products.
Right.
So people are used to 20-30% down.
Yeah.
Right. And so
in Mexico too, you can't.
Right.
It's hard to get financing.
Exactly. So what people do is, so they go, okay, well, I need to save more. Also, Asian community generally tends to be very price sensitive.
Yeah.
In terms of rates, and so they will try to get to 20% so they can avoid the MI and all that kind of stuff. So that's part of it. But I think generally the income level credit history is generally pretty decent. So it
interesting topics, right? I mean, this is something you don't always think about. On the loan application, it asks these questions like, are you Native American? Are you, Asian? Are you Hispanic, not Hispanic, white, black? So these are interesting topics, interesting questions. One also factor is, what percentage of Americans are Asian? Like, do you know that?
Yeah, it's about 6%.
Okay.
Of the U.S. population are Asian Americans. But if you look at...
so that's a really small minority, because I think African American is, 12, 13%?
12, 13%. Hispanic is probably like, I don't know exactly, but 18, 20%. I'm sure. It's something in that range. In California, Asian community is about 16%.
Okay.
So it's much...
In California, there's more.
In California, but nationwide... You don't find that many Asians in the middle of the country, although that's changing.
Yeah.
Like, it's changing. There's actually more Asian Americans in the South than there are in the Northeast, which is like New York, Boston, all that combined.
Interesting.
Right? Which is because the migratory pattern. People are going to where the jobs are.
Yeah.
Right. And so you see a big...
Texas
is big. So... a lot of
Atlanta, maybe, or
Atlanta has a big Asian population, but like you throughout South, you're seeing the growth in places that are unexpected, right, for the community. But it's 6% of the U.S. population, but it's growing it's growing at a faster clip than any population.
Really,
right? It's growing at a.
Is it immigration that's growing? Or is it children?
Primarily, it's immigration based.
Okay.
But it's also people who are
having
here,
more kids.
So part of it is the growth is really significant. The other thing that I kind of look at is this: while it only represents 6% of the U.S. population, it represents 12% of the professional workforce. So
Wow.
Asian Americans over-index in terms of work.
Wow.
Right.
Yeah.
And we also over-index in terms of small business ownership in this country.
Wow.
So you kind of look at all of that, and you go, okay, that's where the purchasing power is like skyrocketing. For the community. Right.
Really, what non-QM is based on is the entrepreneur or the business owner. So there could be a lot of opportunity, I think, in that.
Absolutely. And you see also business ownership for other minority communities, because the Hispanic community has really great entrepreneurial spirit, and so does African American community as well. So there are opportunities to support those communities through non-QM efforts as well.
That's cool.
Yeah.
So we covered quite a bit of topics. Anything we missed that you want to share with our audience?
I don't know. I think it's inappropriate to share anything more than what I've already shared. So
You did a great job. And what about any books that you recommend that you're reading, or any podcasts you're watching you could recommend? Anything that's helping?
You know what? It's just sort of a sad reason why I've gotten into particular reading pattern that I've had recently is, I don't know if you followed, but there's been in the last couple of years a lot of hate crimes against Asian Americans in this country.
Really?
That number has sort of skyrocketed, particularly during the pandemic.
Wow.
Because people blame the whole
From China,
COVID as China. And so there was a lot of attacks of Asian Americans in like all the major cities. Like you see those numbers like skyrocketing, right? So old elderly ladies getting attacked, old men getting attacked and killed. And you saw thousands of that all throughout the country.
And you don't see it on the news much. At least I haven't seen it.
That's what we in the Asian community we say there's a media bias. You're not covering these things, right? For us. And so, but the community has sort of stepped up and tried to raise awareness. Because of that, the last couple of years, I've read a lot of Asian-based novel, authors. There's a great book called Pachengo, which is not Pachanga, which is a casino.
The casino.
Pachengo, which is it's a really great book. It kind of chronicles this family, Korean family, through sort of the Japanese occupation of Korea all the way to modern day. But it's just a beautiful story. I love that. There's also other books about kind of the Asian American history that I've been reading a lot recently. I'm reading a book called the Loneliest American, which is about the cycle, kind of mental state of the Asian American community not feeling like they belong in this country. Right? It's a great book. So I've been reading a bunch of books like that, mostly for me to just kind of like, I wanted to get inspired, but also just to feel more grounded in the work that I'm doing.
Yeah, that's great.
Yeah.
Where does someone find your work and connect with you?
They can connect with me. I'm on LinkedIn.
Yep.
So it's just Jim Park. And
but if they want to join like the Mortgage Collaborative, is it just .com? Or?
Yeah, Mortgage Collaborative. My Mortgage Collaborative is made up of lenders. So you have in that case
you have to own a company, right?
You have to own a company, so you could be a member, John. I hope you come.
I'm it's probably time.
I think it's time. You'll learn. You'll learn a lot from it. It'll be great. But it's our lenders and also vendor partners, people who are selling into the mortgage business.
Do you have to have a certain size mortgage company?
No, we
because a lot of our listeners are mortgage brokers. They own maybe a medium size or smaller mortgage shop.
Yeah, you can't be a broker. You have to be.
You have to actually have a warehouse line and all that.
Yeah, you have to fund a loan and so on. But we have some brokers who turned into lenders, mortgage, because they saw the grass was greener the last couple of years on the other side. So they're like, oh my God, I got to become a lender. So we have some members like that who
trying to grow, and they probably get a lot out of it.
Right. They've been a broker for a large broker shop for a long time, and they're become a lender, and they actually those individuals benefit a lot because you're around tons of experienced mortgage bankers, and they can pick their brains day and night, on how to kind of set up their operation.
So if you want to become a mortgage banker, it'd be a good
it's
deal.
It's a great way
free education, free support, and
people are
not free. I mean, you guys got to make some money.
We make a little bit, but it's what you're going to do is you're going to learn from people that run the business every day.
Yeah.
And it's sort of invaluable, and people are very generous in our network. It's shockingly open about how they run their business, and it's nice. It's nice to see that.
That's good to know that there's some kind.
Yeah, so just look me up on LinkedIn or Mortgage Collaborative if they want to know about that, or ARREAA or anything else I'm working on.
Yep.
Just shoot me a note, and I'm happy to get anyone connected.
Awesome. Well, definitely follow Mortgage Collaborative and all the listeners here. Just please like, share, subscribe, share this information if it benefited you, and we'll see you on the next podcast. Thanks for joining us.
Hey, thanks for having me. Really nice to get to know you.
Yeah, you too.
Yeah.
All right.